All right, Aditya, thanks for coming in today. Thanks for coming on the pod.
Thanks for having me, Jeff. Yeah, it's an honor. I think we talked about me being a fan before coming on, and it feels like a real special place for like the New Zealand blockchain community to come and be a part of. So yeah, I'm really happy to be here.
I've got you as a writer or as an analyst, and you're associated with Brave New Coin. Perhaps you've been there a while, perhaps you haven't. Maybe you can tell us how'd you get involved with all of this, and what is Brave New Coin up to?
Yeah, so I can start from the beginning. My initial introduction to crypto was with a flatmate at university, who used to buy and sell things on Silk Road. And he showed me what was going on with the Tor browser and this crazy marketplace where it seems like you'd like buy all this nefarious stuff. And I was a bit like, wow, what is happening in the world and what is up with this technology? And I kind of forgot about it. And then when I was in university doing my master's degree in economics, I came across a couple of models for how like crypto could be used to evade capital controls. And I thought that was very interesting. I left university and, was sort of doing some soul searching. I think economics research, I wasn't cut out for it. And I sort of had like, grander visions for like making money and that sort of thing. And I came across this job application for a company called Brave New Coin, a crypto like research and data firm. And I thought it was very interesting. The task for the application was to write a story about the Lightning Network. And I think, from there, I kind of fell in love with it. I thought it was, a really powerful concept, the potential to change the world. And that was like, my eureka moment with crypto.
So you didn't know about the Lightning Network beforehand, or?
No, but I didn't know about it. I didn't really know how Bitcoin worked until I applied for that job. I had a very cursory understanding, like most people do, until they dive into Bitcoin about how it worked and what it was used for. That was about 6 years ago. And I think this is not an uncommon experience for people in the space. Crypto kind of pulls you in a bunch of different directions. Whether it's trading, whether it's looking into the tech, whether it's, narratives and like venture style investing. I'm broadly a writer and analyst at Brave New Coin, but I wear a few different hats in the crypto space. I'm a freelance writer as well. I do analyst tasks for some of the funds that Brave New Coin's parent company, Techemy, runs. And I also assist with some deal flow operations, which is essentially helping crypto startups to raise funds.
Just going back there a little bit, did you ever dig into the Silk Road yourself?
No, more after the fact. Like looking back on it, I think it is still a very interesting concept because you look at most marketplaces where you can buy things using crypto and it's priced in US dollars. But I'm yet to see something since the Silk Road where things are actually measured or priced in Bitcoin,
right?
Where it's like, sats instead of like a conversion, which, I still think is unique to Silk Road. I'm sure there are other, maybe darknet marketplaces that do the same thing. But I haven't seen anything like that in mainstream.
Yeah, that is interesting. I mean, we might never see that again, right? With the maturation of Bitcoin.
Yeah, and the emergence of things like stablecoins and
I mean, it's an obvious use case though, right? And like, I guess regardless of how you feel about Ross, right? Like he's still in prison.
Yeah. It does feel a little bit like he was made an example of. It is, like the guy who, the academic publisher who, got in trouble for publishing like academic research.
Yeah.
It feels like the US government does not take kindly to that.
Yeah, I agree. And they decided, I mean, it's a fascinating story, the like how the FBI agents caught up with Dread Pirate Roberts. And so I'd recommend, as an entertainment, I would recommend people dig into it. But so I was in Canada at the time, and things like marijuana is legal now in Canada.
Yeah.
At the time, it wasn't. And so, I also had people that were using Silk Road basically just to buy weed. And they were like, and the Bitcoin was like the crypto was a secondary part of it.
Yeah.
But the bit that the marketplace solved was that it was like a little bit safer because you just sent Bitcoin online and then you received whatever you were buying in the post.
Yeah.
And you didn't have to like go find someone, go meet them. You didn't have to leave your house. And so, it's kind of like capitalizing on that Amazon type of efficiency.
Yeah, I had a very similar experience. It kind of blew my mind how simple it was, how safe it was. That the fact that a transaction like that could happen, and you avoided having to go into some dodgy person's car and drive around the block if you wanted to. Yeah.
What type of economics did you study, or what did you major in, or what was the focus of your graduate studies?
Yeah, at a master's level, you don't really dig too deep into specific elements of economics. It's still kind of broadly like macro 1, macro 2, macro 3, macro 4. But my thesis speciality was applied economics. So that involves taking an everyday problem and applying like an econometric or like an economic model to it. So my thesis was on how efficient high-performance sports funding in New Zealand is. Developed a model for that. Tried to figure out variables that affected the outcomes, which for me was meadows, and I had like a side model about whether sports funding should be directed towards high performance or whether it should be more generalist. So should things like road running be funded more prevalently than meadow sports, which don't have high participation rates, like gymnastics or
especially here in New Zealand, right? If you don't have a large culture, if you don't have a large baseline in terms of like the kids participating in programs, then we probably at the top end don't have the same outcomes.
Yeah, exactly. And it all kind of changed with the USSR, China, and then the UK, Great Britain having very successful high performance funding campaigns, and getting lots of medals at the Olympic Games, which led to this outcome, which was national pride, or happier to be British, happier to be Chinese, something to shine on the global stage. And New Zealand has taken its high performance sports funding model from the UK, it seems like, and a similar sort of hoped outcome, which is national pride and lots of medals and aspirational type of outcomes.
All right, I mean that seems that seems nice and relevant. You haven't looked back on that since, though. You're now, let's say, full time in crypto or in the finance side.
Yeah, I'm deep in the rabbit hole for sure. I still do some modeling every so often, but it's more like financial modeling these days.
Okay. So one of the hottest topics lately is the Bitcoin ETF.
Yeah.
Very broad question. You can answer this however you like. How is the ETF going, and how do you see it, affecting markets, either crypto specific or otherwise?
Yeah. I think good, bad, and ugly. I would say it's going that way. 2023. I think a lot of Bitcoin bulls and Bitcoin holders were very thankful for the ETF because it created a lot of speculative price momentum. People saw names like BlackRock, the biggest asset fund manager in the world, Fidelity, the biggest 401k provider in the world, applying for Bitcoin ETFs. And it was this real sort of validation moment. It was, these big mainstream players exploring the idea of Bitcoin. People got very excited. Fast forward to the ETFs actually being launched, and what we have observed in the weeks since it's been launched is heavy selling pressure, mainly because of one particular ETF, the Grayscale Trust ETF, and I wouldn't say there's too much. I guess I combined the bad and the ugly there. But even then, I don't think there's more to that story than just selling pressure because people are bearish. I think, and taking a step back and looking at the bigger picture, I think the ETF is a very positive step forward for Bitcoin. Infrastructure and systems and expanded markets are always a good thing for an asset class. And the ETF lets more people, gain exposure to Bitcoin. The spot ETF, which is different from this futures ETF, which was released a couple of years ago, involves actual physical Bitcoin, not a derivatives contract. So again, the ETF providers that are selling, shares of a fund of like paper Bitcoin to the general public actually have to buy physical Bitcoin to back up the shares that are selling the paper Bitcoin that they're selling. And yeah, that means the BlackRocks of the world, the Fidelities of the world, the ARK Invests, have to buy Bitcoin. They have to figure out how to custody Bitcoin.
Yeah.
So yeah, I think even in terms of like information and education, you're seeing Fidelity, release like stuff on their social media to educate people on how Bitcoin works. Yeah, so I really think it's going to be a stepping stone moment for the U.S. public and probably the global public because when ETFs trade on like the NYC Arca and these big exchanges, global pension funds have access to them.
We have access here through Sharesies and so on.
Yeah. And like, BlackRock has their iShares brand, which is, if you've used Sharesies and you see the ETF, you might see iShares. And the iShares Bitcoin product released by BlackRock has been incredibly successful. And yeah, it's probably because of that track record. And, people see it like, popping up on their apps and like, Sharesies or the Robin Hoods of the world have this like, okay, this isn't like a weird sort of fringe ETF, the big players in the market are backing it.
Do you think people would be slightly put off by the fact that somebody else is buying and managing that Bitcoin for them and all you see is like that line item on your statement or in your app?
Yeah, it's interesting. I think for a lot of us, people who are semi-crypto centric, an ETF really doesn't matter to us because, buying and selling Bitcoin is quite straightforward. You can just sign up to a platform like Easy Crypto or an exchange and just buy Bitcoin very easily. I think for one, taking a step back from that question is pension funds. So there's certain larger entities where actually custodying Bitcoin and managing digital wallets at scale is a little bit of a challenge. So Bitcoin trust products in the past have been quite popular for like large institutional funds because it means they don't have to actually worry about security, managing the Bitcoin, like cold storage. So yeah, the pension funds have access to it.
So you mean that like an individual doesn't necessarily have their own pub key?
Exactly. Right. Yeah.
And they can, I guess, benefits of batch processing, buy and sell in volume.
Yeah. At the individual level, I can understand that perspective where, I'm not in control of the Bitcoin, it's just like a number change on the app. And, I think at the individual level, you're not to put thoughts into any people's heads, but yeah, if you're comfortable, buying Bitcoin yourself and managing the custody, you're probably better off than buying an ETF.
Yeah, I think it's net positive, like you also said there. But to me, it's so simple. Like you have this Bitcoin, and then it's like, well, can you spend it? And you're like, oh, actually, I can't. So I mean, it covers off the idea of Bitcoin as an easy investment.
Yes, yeah, and it's good for price exposure. Bitcoin these days has developed into kind of having two sort of value propositions. One is as a store of value, something like almost like a share. I'm just whatever broadly speaking here.
Sure.
But it's like something the price goes up, happy, price goes down, sad. But for other people who care about the technology,
hundreds of hours of research. That's what we're left with. Happy, sad.
Yeah, exactly. And for some people, it's just that it's an asymmetric bet. It's an asset that performs well, irrespective of what's going on in the wider economics of the world. But for other people, Bitcoin is about the tech. It's a decentralized money network of which we've never seen work so efficiently in the past. It's a way for non-government, non-controlled currency to actually exist efficiently. In a lot of ways, it sort of fills the role that gold used to play for a lot of people as a hard asset that you can rely on when your everyday fiat money isn't working so well. We've seen it have traction in places like Lebanon and Argentina for those reasons. But yeah, there's another side of it, which is the investor, the trader side, who is just like, hey, there's this asset I want exposure to, I want price exposure to. So an ETF is, good for that sort of individual, somebody that doesn't care about actually spending the Bitcoin and just wants the speculative value.
Have you been tracking the flows, like the GBTC outflows compared to the new inflows? What are your thoughts there?
Yeah, so going back to the GBTC thing. So when that ETF launched, it was a little bit special because it arrived with all of this existing AUM. So there were already these assets under management, because GBTC previously was not an ETF. It was a trust product that was only accessible to institutional investors. And there are certain like ring fences for a product like that. So it's a closed marketplace. You can't just sell your shares to anybody whenever you want to. I think the way GBTC work is there was like redemption windows where you could swap your Bitcoin trust shares for like actual Bitcoin, and those only came around like every so often. So yeah, I think for holders it was a little bit frustrating.
Yeah.
So
and
yeah,
it's been around.
And it's been around a long time. So a lot of people who held shares that were somewhat illiquid were, just looking for an opportunity to sell them.
Right.
This trust then gets converted into a full ETF, which, is accessible to retail, has a proper order book. They were just like, and Bitcoin had a very strong, price period leading up to the ETF launching. So yeah, it was like a natural selling opportunity for holders of this previously illiquid share to sell it. So that's kind of what happened. There was just sort of this like profit taking kind of moment, and people who had GBTC shares sold, maybe not because they were sort of bearish about gun, but maybe because they were a little bit stuck with this illiquid asset and they were just wanted to recuperate some of it. So that was the GBTC story. Like with other ETFs, like the BlackRock ETF and the Fidelity ETF, there were actually pretty decent inflows. But yeah, because GBTC had such a large AUM, as you said, it had been around for a long time. It kind of overtook anything else that was happening around it. And yeah, net outflows were pretty much negative up until very recently. I think in the last week or so, they sort of flipped positive because people are buying BlackRock shares, or they're swapping their GBTC shares for shares in other ETFs.
Selling out for a lower fee option maybe, or for whatever reason.
Yeah, exactly.
And in terms of like running the clock forward, crystal ball gazing, is BlackRock going to take over Bitcoin?
I don't think so.
Is that just a fun story on the internet?
I think it's a fun story. BlackRock is a company that has its hands in a number of different pots. And, maybe if they wanted to, they could take over Bitcoin. But yeah, I mean, everybody loves a conspiracy theory. But I don't think they've indicated that that's their plan. I think, this is just based on client demand, and, they're just going to go with the market. And, they have bigger fish to fry, like uranium and whatever other, wars to fund and whatever else BlackRock does.
Maybe they have bigger crypto fish on the way. What do you reckon about Ethereum taking the same path that Bitcoin has?
Yeah, I think it's inevitable. One, because BlackRock has applied for Ethereum spot ETF, and they have an incredibly successful record. I think the other thing to mention here is that the SEC sort of has its hands tied behind its back. So that's the Securities Commission in the United States, because of some really recent legal losses, particularly the loss it faced in an XRP lawsuit, where a judge sort of said, XRP wasn't an unregistered security sale. It doesn't pass the Howey test. So if XRP isn't considered a security in the US, then Ethereum probably isn't considered a security. So that, means sort of free reign for ETF issuers to try and build ETFs out of it. With BlackRock applying for an ETF, a deadline set for May, which the SEC has already delayed. And a delay is generally a sign that they're just trying to push the goalpost back and don't really have a reason to reject.
So the Bitcoin one was just sort of delayed for years and years.
Yeah.
So would they have the option of doing that, or based on these legal precedents, you think perhaps it'll go quicker?
So what we've heard is that the final deadline is May for this current round of applications. So that's like sort of the month in the calendar most people have marked for when an Ethereum spot ETF is. I think it's going to happen. I think, now we have ETF issuers actually, filing lawsuits against the SEC for wrongfully denying applications. So again, their hands are tied behind their back, and they're losing cases. So they lost that case against XRP, and then they lost another case against Grayscale.
Right.
They're running out of excuses to not approve ETFs.
And so let's talk about maybe a fundamental difference between Bitcoin and Ethereum. Ethereum, the network, runs on this idea of staking, and stakers are directly or proportionally rewarded, and this could be translated into seeing the token Ether as like a yield-bearing asset. Compared to Bitcoin, which isn't designed to do anything such as that. So would this change sort of the status between those two?
It's a tricky one. It could be argued that way, but the actual way the technology works is staking serves a purpose towards the functioning of the network. It's not like interest. Stakers who get this yield for locking their Ethereum into the network are actually contributing to the security of the network. So, it gives it like utility. So, yeah.
The subtle difference there is that you're not just donating capital, but you're actually also participating in the network.
Exactly. Yeah. And it may feel a little bit like you're just, depositing and receiving, but you are actually participating in the network and doing a task that, serves a function for the network. So
are we bullish Ethereum and Bitcoin?
I would think so. And, if you look at the correlation between the two assets, it's something like 0.89 or even, I think 0.89 the last year, I think even higher if you look historically. So they sort of move together. So what is it bullish for Bitcoin is also bullish for Ethereum, and maybe less so vice versa, but yeah.
Yeah, I find it hard mentally to separate the two in terms of performance like that. When you say like the correlation is 0.9, that's like in science, that's terrific. You're like, hooray, fireworks, let's get this published, right?
Yeah.
But here it's like, it does seem when you zoom out to be in lockstep with each other.
Yes, yeah. And also there's like functional reasons for that. Like, when crypto first started, it's a relatively new sort of marketplace for assets. BTC used to be the normal trading pair. It'd be like ETH BTC, XRP BTC. So when you were selling your BTC, you were normally selling it for ETH or XRP or another asset. And that's still the case. People often use their Bitcoin profits to buy into other assets. So you often see this pattern where Bitcoin will have a run, and what follows the Bitcoin run is an altcoin run. And when I say altcoin, that's everything apart from Bitcoin.
Everything apart from Bitcoin, Bitcoin's the king, right?
Yeah.
Just on the Ethereum piece here, you recently published an article on Cointelegraph. Is that right? Cointelegraph? Yeah, about some of the upcoming upgrades in the Ethereum network, particularly about danksharding, proto danksharding. Can you give us a summary of what's going on? Like, is this also something to watch out for in Ethereum, or is this maybe only for like the technical nerds?
This is definitely something to watch out for. It's a staggered release, which is why we have proto danksharding and danksharding. So proto danksharding is going to come first, and there's an update which has been delayed a few times, but I think they're hoping for it to happen in the first half of 2024. But yeah, the reason it'll affect like every user is because it is designed to improve the scaling capabilities of Ethereum. This is something, if you study blockchain, you come across very quickly is the scaling trilemma. So it's very difficult in a decentralized network to scale without sacrificing decentralization or security. So you have to kind of commit to 2 out of the 3 or 3 out of the 3 if you're very lucky. So Ethereum has come out with a number of scaling strategies. A lot of them involve these things called layer twos, which are like periphery networks that are connected to Ethereum, but you can offload transactions to. So yeah, just
layer twos are hot, right?
Layer twos are
that,
extremely hot.
Like the narrative like a year and a half ago was alt layer ones, 2 years ago now, alt layer ones, and now we're into layer twos, or is that kind of also a bit past?
Layer twos are definitely still blowing up.
Yeah.
And Ethereum has made it very clear that scaling Ethereum, it's not going to happen on the base chain, it's going to happen on layer two. So networks like Optimism, Arbitrum, Metis, increasingly we're seeing like Ethereum and the Ethereum Foundation like build solutions for the layer twos. It's almost like the layer twos are, have become a part of the layer one. Like, so going back to danksharding, that is a method for compressing the data that a layer two needs to send to the main chain. So specifically rollups, which is like a layer two solution that's very popular. Danksharding promises to optimize the number of times like the layer two communicates with the main chain, and improve how quickly things verify, reduce the costs of the actual layer twos. So let's say Optimism, maybe it's 50 cents for a basic transaction. They're saying we can get this down to like a cent, and the throughput might be like 1,000 transactions a second, where it's going to say we're going to push it to like 1 million transactions per second.
And this is going to be on the layer two, not on the base Ethereum. So I mean, how do you see this, like in terms of like even conflicts here, because we're scaling Ethereum with danksharding and proto danksharding, or first proto danksharding, but then that's going to benefit all the layer twos.
Yes,
right.
Or specifically the ones that use rollups, which are, Optimism and Arbitrum,
right.
which like probably are 90% of the layer two volume. So yeah, most of the.
And then the idea is that most of the transaction activity is going to happen on the layer twos, with increased throughput all the way to the base chain.
Yes, yeah.
And are people like, is this a really big problem in Ethereum right now that we need more on base layer one Ethereum?
Yeah. There's differing opinions. I think there's the everyday user aspect, and I think a lot of like day-to-day users are like, Polygon's great, it's fast, it's cheap. Arbitrum is great, Optimism is great. It's fast, it's cheap, it's better than Ethereum. I don't have to wait 20 minutes and pay $10 to buy an NFT on OpenSea. I can spend 50 cents and wait 30 seconds. Yeah, there are some issues. So like, for example, the security model for layer two would be that anybody can dispute a transaction. So there's these things called fraud proof. So if I send a transaction on a layer two to be verified by the layer one, and I don't think that transaction is correct, or I have an issue with the transaction, I can submit something on the layer two to say it doesn't work, and then the layer one will verify. But what it turns out is not many users are actually disputing transactions.
Okay.
I think maybe in the last, there was a report that came out probably at the start of the year that said in the last 8 months, 2 transactions were disputed. So we're not actually really leveraging layer one security that often. It's almost like you're operating on a separate chain because nobody is using that layer one security model. It's being verified by the layer one, but it almost doesn't need to, because most people are just very happy to use the layer two and not dispute the transactions. And it's not kind of trustless anymore because, again, sorry to take us to keep going off into this, but Optimism and Arbitrum have their own separate consensus models, which are normally delegated proof of stake, which is kind of the antithesis of the sort of distributed proof of stake or the proof of work model that we expect from our layer twos, like a high level of decentralization. The layer twos have a much smaller level of decentralization, but they make up for that by saying we communicate with the layer one periodically to ensure that our smaller, less decentralized consensus model can be trusted. But because so few people are disputing the transaction, it appears as though, it's so arbitrary.
We need more fraudsters out there attempting to attack the chain. Do people just not care anymore? Like if you're doing like an NFT project, right, and you're having people like lots of transactions and lots of volume through like minting or whatever it is that you're doing, we're just trusting Arbitrum. We're saying it's fine. Pick your layer 2 and go.
Broadly, I would say my opinion is, I don't think people care too much. I think they care about speed and cheapness a lot more. And that's the same kind of thing we saw in Web 2. People will use Google Docs or free applications, even if it means like sacrificing, privacy or security at times. I think that's the bottom line.
DeFi, you want to use Uniswap v3 without even caring about why it's better than v2. You're just like, all right.
It's like a shiny coat of paint more than anything sometimes.
Yeah, I mean the delegated proof of stake piece is interesting too, because that scale of decentralization is sliding in the other direction, isn't it?
Yeah. And it kind of defeats the purpose of, why even have Ethereum anymore if, what we care about with specifically our decentralized applications is, speed and cheap transactions. For, gaming, blockchain games, right? Where there's frequently microtransactions. Yep. You're constantly having to sign things. Layer 2s or blockchains with, expedited consensus do become a lot more useful. Ronin, Axie Infinity's chain is getting games, like it's pulling in games because people want that fast, specifically designed for application type of consensus, which sacrifices decentralization and potentially security. Like it's much more difficult to stop a rogue node in decentralized proof of stake than it is in proof of work.
Yeah. In the realm of gaming, where you have this need for writing the state update very, very frequently. Maybe it doesn't matter as much the security bit, right? And you see this in Web 2 gaming as well, where occasionally there's like leaks or people figure out little hacks to like boost their performance or reduce others, but it's just affecting that game at that time. And although on the other hand, Axie Infinity had the massive famous hack.
But unfortunately, I think that was like a spearphishing thing. So you can't human error, for example. And then again, that's another big topic which kind of ties into the whole proof of work. And
zooming out to some macro events, 2024 is already has hyped to be a huge year in crypto. We've got the ETF approved for Bitcoin, maybe Ethereum coming up. We have also expected April 11th Bitcoin halving. That's according to the NiceHash countdown, which I just checked, where the coin issuance is going to get cut in half. What are you seeing? Anything different this time around about the halving?
Actually, to be honest, kind of similar patterns than we've seen in the past, which is a good thing, actually. Just looking specifically at price, there seems to be this almost like, clock-like cycle where, every time, leading into and post-halving, we have these similar sort of price cycles. And that normally leads to like new all-time highs, probably like, I think, in the 6 to 12 month range post-halving, once it's sort of set in and this new sort of mining paradigm, but like miners getting half the reward that they did before sort of sets in. Some of the patterns we're seeing leading into this halving is coins being moved off exchanges into personal custody, which suggests that people are like digging their heels in, their hands are becoming stronger, they're less willing to sell. And that has had like natural implications to the price in 2023. Like 2023 was a good price year. And that is definitely because people are willing to sell less, even when there is a bearish news event, because they have this thing in the horizon, which is the halving. So it's almost like, okay, whatever, maybe there's some new regulation that's making it tougher for Bitcoin companies to exist, but because we've got the halving, and that is almost inevitably, it's like a self-fulfilling prophecy.
Less than a year out, it's easier to look ahead and be like, well, I might as well just hang around to see if this time's going to be different. Or just to see what happens, right?
Exactly. Yeah.
I think that in terms of the ETF, the bullish narrative within me, right, it thinks that these ETF providers are going to be surprised when the halving hits based on the amount of available coins on exchange. And then, people that are used to just buying and selling through their app or through their brokerage, people that are used to doing that very easily and cheaply are also going to be surprised. It's going to be harder to get your hands on some Bitcoin.
True, and that's normally a natural demand and supply, forward price mechanism. More demand, less availability. Less liquid coins, less coins circulating because people are holding them in personal custody means that you have to pay a premium if you're an ETF provider or somebody that's desperately in need of Bitcoin. Another interesting pattern is miners as well. You see hash rate sort of rising and miners engaging quite heavily in the network. They're mining more because one, they get a higher reward now versus April 11 when the reward gets cut in half. And also, because of this, self-fulfilling prophecy, they're like, okay, we may be operating at a slight loss at the minute. Hash rate is rising. It's very competitive mining at the minute. However, we've got, this natural bullish event coming up. So we're willing to operate at a loss a little bit more.
How do you see that? So you're talking about more, you said that we can mine more. How does that work? How can you mine more? How can miners sort of go all in now compared to what's going to go on after the halving?
So I think the reward at the minute is 6.25, and then it's going to go to 3.725.
3.125.
3.125, sorry. So that means that for each block that you mine, your reward goes down from that number to that number. So unless the price of Bitcoin is much higher, then you're obviously going to be earning more Bitcoin now than you would post the halving.
Right. So you want to get as much Bitcoin now because your block reward
is going to.
Well, you know what the reward is going to be, but you also know that what's the analogy here, or what's the parallel that your revenue is going to get cut in half.
Exactly. Yeah.
There's this. I mean, that's really unique, right, for Bitcoin, because in other industries you can kind of predict maybe seasonal variations and stuff, but you don't know when things are going to get halved.
Exactly. Yeah. This it's it's like for a farmer knowing that there's going to be a storm coming, 8 months from now, on a specific day, on a particular time, to the second.
I like that. That might work pretty well. A farmer knows a storm is coming, so you got to get those crops out and in.
Yeah, and it happens post the last halving too, where smaller miners will exit the ecosystem after, and it's only really the big mining pools that have the scale to be efficient. So now for smaller miners or individual miners, it's a real make or break moment. They're like, okay, how much money are we making now? Are we going to be able to continue operating post halving once the reward is slashed? What's it going to look like? Should we shut off our machines? Should we sell our hardware? So this is almost like a chaotic period in the mining ecosystem.
Lots to look ahead to on that one.
Sorry, just one more thing to mention. Another reason hash rate has been good is because transaction fees have been rising because of the ordinals boom.
Right.
So there's been this new technology, sort of, not to get too technical or go into it because I don't know heaps about it either.
Okay.
But people have figured out a way to issue NFTs inscribed onto sats on the Bitcoin network.
Okay.
And this has led to this new use case. Everybody loves NFTs. And people have figured out that you can have NFTs on Bitcoin the same way you do in Ethereum. It's a good sort of tribe signaling community, a way to tell the world, which chain you back. And there's been a real boom, and that's boosted transactions on the network, and that's led to more transaction fees, which has also been good for miners.
Right. So fees go up, so miners then earn more revenue.
Exactly. Yeah.
And fees, they've been holding high for a while now, I do believe.
Yeah. I mean, ordinals, I think the technology is developing quite well as well. People are figuring out, that there's other images or more complex images that can be converted into ordinals, and people are, understanding Taproot, which is the technology that kind of drives ordinals a little bit better. And it's just sort of developers are exploring.
Coming up a little bit later this year, we've got an election in the U.S. What's the macro outlook there?
Yeah. So the U.S. economy, because of the prevalence of the US dollar in like pretty much every trading market, it's like the world's reserve currency. What happens in the US kind of affects the rest of the world. Everybody looks out for Federal Reserve announcements. The US interest rate is probably one of the biggest determinants of the price of Bitcoin and the US inflation rate.
I thought it was just Bitcoiners that followed all of that stuff.
Other asset classes too, surprisingly. But yeah, so it seems like whoever wins the election, and it looks like it's going to be a race between Joe Biden and Donald Trump, will have different perspectives on how the US Central Bank, the Federal Reserve, should function and who should be running it and whether it should be dovish or hawkish. Currently, the chairman of the Federal Reserve is a guy named Jerome Powell, who, depending on who you speak to, has either done a pretty decent job, tempering, market expectations and, kind of has sort of seems to be pushing the US economy towards a soft landing. But other people think he's too conservative and he's part of the establishment. And Donald Trump has said that he will remove him from his position in the Federal Reserve. And expectations would be for him to put in somebody who's a little bit more expansionary, a little bit more ambitious, a little bit more, let's make GDP grow a little bit more, let's lower interest rates, let's, pump some money into the economy. And that would probably be good for Bitcoin and stocks and shares and investment asset classes.
Just if people have more money or easier access to money. Definitely good for small businesses, good for startups, right?
Yeah. So, companies in the tech space, it would feel like a sort of a Republican win or something a little bit more sort of business friendly would be, good for price. And that would probably, looking apart from the social implications, a Trump win would, broadly, I think, be good for the price of Bitcoin and like a less conservative leader, perhaps.
Right. Powell was just on 60 Minutes.
Yeah.
And interviewer asked him, are you going to get to 2%? And he said the target is 2%, but essentially 2% in the long term. Not the short term. So do you think that's Powell responding to this climate where people are kind of over the tightening phase?
Yeah. I think that may be it. I think people were a little bit frustrated with him, and central banks all over the Western world have this pressure to lower interest rates. You're seeing it here in New Zealand too. People with mortgages are hurting from it, and lots of people are hurting from the high interest rates. And when people see the U.S. economy doing as well as it is, there's like this natural pressure, and that's fueling some of the things that Trump is saying, and some of the things Republicans are saying. So maybe that's kind of nudging Powell to be a little bit more, let inflation run, let GDP run, let employment run. This economy doesn't need cooling off. We need to go back to heating it up.
And in terms of, you also have a piece in terms of investment, which you mentioned at the beginning, in terms of, you can correct me here, in terms of like either evaluating investments or directing investments. So what's, in terms of crypto investment space, right? We have seen like short-term lows in 2023. And has that been loosening up? Or are we seeing more ideas getting funded?
Without a doubt, more ideas getting funded.
Yeah.
I think broadly that is to do with something we just mentioned, which is risk appetite returning. During the pandemic years and the years like sort of after the pandemic, we've seen a little bit more of a safety first approach from investors. Interest rates have been high, a leaning towards saving. Smaller returns for like funds or VCs. And it feels like the aggression is back. People are ready to make money the way they used to pre-pandemic. And that means, bets on technology, bets on emerging technologies, which potentially can offer high returns. Within the crypto space, we're seeing startups, in the layer 2 space, in blockchain gaming, in real world assets, AI and blockchain tokens and projects are, another kind of hot button, exciting thing. There's also very specific crypto technologies for like the real ETH heads. There's this thing called liquidity restaking and the eigen layer, which is getting a lot of buzz on Twitter. It's offering some very big yields on staked ether, and people are very excited about that. So yeah, it feels like things are heating up. BitBM is another one. I think they had a token sale recently that was oversubscribed and made a bunch of money for early investors.
What about, are you seeing anything hyper local here in New Zealand that has your eye or you want to bring up and mention?
I've seen a couple of local startups. There's one called Ramblocks, which I believe is a crypto bot sort of analytics tool to like help you sort of build trading strategies using historical data and trading bots. Yeah, it's one of those things which is very unique to crypto, I think, because a lot of crypto exchanges like allow for API trading at a very like base level. So you can automate your trades, and bots and anything that can automate trading is quite, I think, quite useful for me personally, and for anybody who likes trading crypto. Yeah, but one thing that does make crypto unique is the APIs and the access the exchanges give to you. I don't know if like traditional asset classes you can get full order book data if you request it, or take data in an API form, and that can be quite useful for building trading strategies, and means you can have these like startups that use this like accessible data in interesting ways. Another one that is it's a Techemy Group company called Stable, so a little bit close to home, and that is a stablecoin exchange and a stable asset exchange built on permissionless DeFi. Stable coins are digitized, tokenized versions of real world fiat currencies like the US dollar. I think people will be quite aware of Tether and some of the big USD stable coins, but there's an emerging marketplace for non-USD stable coins. And I think it is an incredibly untapped market. Digitized, tokenized versions of the New Zealand dollar, tokenized versions of the Singapore dollar. Forex is a vibrant, active marketplace, but it also has restrictions in terms of who can access it because of jurisdictional barriers, problems, kind of buying currency. One of the advantages of the blockchain is it equalizes, it digitizes, it facilitates ring-fenced markets and opens them up. So digitized forex, stablecoin forex is something that has never really been done before, and Stable offers like a forex style trading experience, but with stable coins and without some of the sort of barriers you might see from a traditional forex exchange.
Is this like an app, or is this a protocol, bunch of smart contracts?
It's
like, how decentralized are we talking?
No, it's a bunch of smart contracts.
Yeah.
So it's similarities to something like Uniswap. It's an AMM, an automated market maker. So yeah, there's no order book. It's not buyers and sellers.
Is this live yet?
It is not live yet, but we're prepping for the launch. So
prepping for the launch. All right, look out for that. Depending on when this comes out.
The website is live, and you can get information on it. Okay. But yeah, the actual trading.
Where does in terms of this, it might not fit in, but where do the New Zealand stables fit in? There's two to my knowledge. We have Easy Crypto has one, and then Techemy Group also launched one a while back.
Yeah. So it's an open protocol. And like similar to Uniswap, any stable coin can create their own pool, or it doesn't even have to be the stablecoin issuer itself. A community member can also create a pool if they want to. If there is a holder of either of the New Zealand dollar stablecoins, they can just create a pool. Put in some USDC, put in some of the New Zealand dollar stablecoin, whichever one they choose, and they can create a marketplace for it. That's the way AMMs work. The platform will launch with Techemy's stablecoin We have liquidity providers ready and who have said that they want to create pools for NZDS. And we're hoping for a very vibrant ecosystem where we can swap out NZDS for USDC or the Japanese yen stablecoin, lira stablecoin, a bunch of other stablecoins. And stablecoins are interesting also because you need ways to convert it into actual fiat currencies and stuff like that. And sometimes that's one of the advantages of a stablecoin exchange is liquidizing them so that if you have a lira stablecoin holder and there's some issue with trying to swap your lira stablecoin for actual liras, you can use other stablecoins as a way to sort of.
There's not going to be as many Fijian dollars as there are Australian dollars or whatever it is.
Exactly. And that's one of the other reasons stable was created, is to create liquidity solutions for these smaller stable coins. And often it's very difficult for smaller stable coins to get onto big exchanges and create off ramps and on ramps.
Real world assets, RWA, you mentioned in passing a few minutes back.
Yeah.
Is this all hype or something to look out for?
I think it is something to look out for. I am naturally a pragmatist and I'm quite conservative compared to other people in crypto. The most successful version of an RDA is all around us already, the USD stablecoin. The US dollar is a real world asset, and when it got tokenized, people got very excited. Like somebody in Peru or somewhere like that could have sort of the equivalent of a US dollar bank account, and through DeFi and platforms like Curve, you can actually earn an interest rate. And having a USD bank account that earns pretty good interest is quite a powerful thing for a non-US citizen. So that's where I would stand with real world assets. Is there a necessity for this particular real world asset to be tokenized? Is the real world asset or the real asset, are there inefficiencies there? So, tokenized debt, for example, has become one of the biggest use cases for real world assets after stablecoins, because startups have trouble with funding. So we're seeing these platforms where you can have a microfinance project in Africa on platforms like Goldfinch, and in their local markets they can't really find investors, but once they create a tokenized version of their debt, they can sell to the whole DeFi ecosystem and access funding from different areas. So funding, for example, is one area where crypto and the blockchain space does very well. Smaller projects, startups sometimes use the token or the ICO model to raise funds where they couldn't go through VCs because of a number of different reasons, whether that's jurisdictions, whether that's a lack of networks, and tokenization is quite useful there. So that's where I would stand with real world assets, as opposed to should we be tokenized? And it's not about can we tokenize real estate or silver or whether it's more about should we
stocks
or stocks. Well, I mean, stocks an interesting one because I do think the stock market works quite well. Most people trading stocks aren't oh, I wish this was tokenized. That's.
So I mean, those two use cases, right? It's kind of backwards, right? Because stablecoins have been around for a long time, and I think have proven their value. And then the other one you mentioned about tokenized debt or fundraising, right?
Yeah.
Like you mentioned, crypto's very good at this. And despite the ICO boom sort of running away with heaps of money and a lot of projects going to zero, despite that, I think that the idea of the ICO is a brilliant way to raise funds. But this is already happening, only now, 2023, 2024, we got this new buzzword, real world assets.
I think that's, it's interesting to have this conversation because, I mean, they've existed for a long time. People are very aware of it, but it's just we're calling them real world assets now, and you have real world asset platforms. And when you write your pitch decks, you have the word real world asset mentioned a bunch of times. So, and it's it's interesting. I've spoken to a lot of projects that don't want to use the word NFT anymore. Digital collectible or asset-backed token or some other term that is for all intents and purposes an NFT, but because of so many people were burnt by NFTs that deteriorate in value and are worth 2% of what they used to be. People don't want to buy NFTs. They want to buy art-backed assets or whatever.
There's more real-world assets there.
Yeah, probably. I guess you could call
tokenized art, which we have seen before, though maybe there's a lot more coming.
Yeah.
To finish us up today, I've got some rapid-fire questions for you. What's your favorite chain that few people are talking about?
Good question.
Or what do you got your eye on, maybe just off to the side,
So, I think actually, I don't know if it's a chain, but more of a layer 2, but the eigenlayer.
Okay.
Kelp DAO is a real interesting project. And the way the eigenlayer works is it's a liquidity layer for layer 2s and, like gaming applications or DeFi applications built on layer 2s so that they can access like staked Ethereum for, security purposes. So, I think that's a very interesting paradigm. And, and I actually think a layer 2, again, I don't know too much about the technology, but Metis is very interesting to me.
Yeah.
It seems like it's growing in popularity.
And you mentioned liquid staking before. Is that what you said?
Liquidity restaking.
Liquidity restaking. Are we starting to get into dangerous territory here in terms of rehypothecating capital?
Potentially, but it goes back to the conversation we had earlier about Ethereum, whether it's a security or whether it's like an investment scheme. There is a purpose to liquidity restaking. Yes, it may be pitched as, hey, your staked Ether, which is already earning 4%, we could rehypothecate it and put it onto the liquidity restaking layer that you're also earning 12% on top of the 4%. But there is like an element of technology behind it. But for the DeFi degen, this is
okay. At your own risk.
At your own risk.
Do we see 100K Bitcoin this year?
Yes.
All right.
Yes. I think we'll get new all-time highs this year, maybe around 100K.
Last one I asked all the guests: who is Satoshi?
It doesn't matter, to be honest. I the first thought that came to my head is a collective of people. I think honestly, if I was to place bets, I would say it was a collection of cypherpunks who got together and they needed a nameless founder that could be symbolize something about see the pseudonymity and not wanting to take profits. And I think Satoshi is an idea and not a person.
Great. Aditya, thank you very much for coming in today.
Thank you for having me, Jeff. This has been really fun.
Cheers. Thanks for joining us, folks. Look out for the next episode of the Blockchain New Zealand podcast, probably in the same spot you found this one. Cheers.